Being a good lender is one of the most important things you can do, right, Tim?
Yep, absolutely.
Let's roll. Hi, welcome back to another Coffee with Coleman, where we love to discuss Washington, D.C., business, real estate, all that good stuff. My name is John Coleman, and I'm a real estate agent here in Washington, D.C. with the Jason Martin Group. Please do me a quick favor, go ahead and hit that like button below to let me know that you're watching this. And then additionally, if you're enjoying what you're watching, go ahead and hit the subscribe button so you can get alerted when I release new videos each week. What we're talking about today is how to pick a lender. It is not as cut and dry as you might think, but I think with these 5 tips, it's gonna help you understand the things that you should be looking for in a lender who's your partner and making sure that you get the best person to get you the right home. First is, I would go local. Going with one of the big banks is something that I see people wanting to do because that's who currently has their money. However, the big banks have problems in our market. And let me define why we have problems with them. It's not that they're not able to close the loan, but they're not able to move as swiftly. Big banks typically have a lot more process and a lot more red tape in terms of getting you from start to finish, whereas a local lender might have the ability to move things a little bit quicker and smoother because they have more control over the entire process. For example, if you're working with a local lender that only needs 7 days to give you an official commitment letter after you go under contract, that's going to look much better to the seller as opposed to one of the bigger banks who typically need closer to 21 days to give you that same commitment. From the eyes of a seller, they would much rather have the assurance in 1 week as opposed to 3. Make sure they know the ways to save you money. DC is loaded with first-time homebuyer programs that can help you from the get-go and having less cash come out of your pocket, either from a down payment or your monthly payment. Some of these can be DC Open Doors, HPAP. Those are programs that cover your down payment, and we have tons of videos that talk about that stuff, so go check those out. And additionally, there are other ways to reduce your closing costs by applying for different things in different ways. And if you're working with a local lender, they will know the tips and tricks to ensure that you're getting the best deal possible. The third thing I do is ask the lender how long they've been in the business and typically how many loans they're processing in a given year. The reason this is important is you don't want to get stuck with someone that's new. If you're stuck with someone that's new, that means you're a guinea pig, and you're a guinea pig on one of the biggest investments that you're making in your life, and we don't want that to happen. So what you want to do is just ask a little bit about what their background is, how long they've been in the business, and then go back and make sure that you can find some reviews online and do a little double checking to make sure that you're working with a person that is seasoned and ready to rock. So number 4. Number 4 should probably be number 1 or number 5 because it's the most important, but today, for some reason on the sheet, I put this as number 4. Number 4 is making sure that you're getting the best deal for your money. When you're comparing lenders and you're comparing rates, there's really 2 numbers that are the most important thing. First is how much money is going to be coming out of your pocket for your down payment and your closing cost. That's an easy number to compare from one lender to another. The other number to compare is what is your monthly mortgage payment gonna look like? And this has more to play into what your rate is and what those numbers tally up to be at the end of the day. However, the challenge with comparing these numbers before you're under contract on a particular property is they are working with hypotheticals. If this property sold for this much, this is about how much it would be, and it's not a true apples to apples comparison because there's a couple different things that can factor into those numbers being different. However, once you do go under contract and you give that contract over to your lender, they'll be able to give you those numbers straight up. And then you'll see that there are small discrepancies between the two, and I would not hesitate to ask lenders why one number is different than another number that you're seeing on someone else's sheet. At the end of the day, the most important thing is factoring in how do you make sure that you're coming the least out of pocket, and how do you make sure that your monthly mortgage payment is the best for you. Number 5, planning your credit pulls. I would go ahead and have the credit pulls happen around the same time. The reason for this is you want to make sure that the lenders are operating off of, one, your same credit score. If you spend a whole bunch of money in the middle of the week and you pull one on Monday and one on Friday, your credit score might change. Additionally, if you pull those credit scores closer together, it's not going to show up as a bunch of individual dings on your credit report that's going to impact your overall credit. The bureau is going to understand that you're probably shopping for a mortgage and it's less likely to impact you overall. So getting all that tight and to happen fast is going to make the best experience for you. And here's a pro tip. Work with a lender that's willing to talk to you about improving your credit score. Some lenders will say, here's your credit score. This is the rates you're gonna get. Other lenders are gonna say, here's your credit score. If you play with a couple of things right here, I think you'll bump up your credit score enough to impact your rate and get you an even better deal. You are looking for a partner in this process, not just a lender. So this is one way to tell if they're going that extra mile to make sure that you're having a positive experience. Is there anything I missed? Let me know in the comments below. I'll go ahead and try to address those down there, I guess. And then additionally, if you are looking to just make this easy and you want a couple recommendations on some rock star lenders, let me know. I know some of the best in DC that'd be able to take very good care of you. So just shoot me a note, contact info is below, and we'll make sure that you get synced up with the best people. All right, well, thanks again for stopping by another Coffee with Coleman. Peace.